All right, good morning. Welcome to today's show, live at 9 o'clock, ProMedia. Thanks for joining us today. We're going to break down grains, livestock markets, talk about what's going on in the world of ag markets here, and cruise through today's headlines. So, live at 9, you never know what's going to happen between the overnight hours and the morning live drop. We got the markets open here. Let's go check out where they're at, and then we'll get into your headlines in the show here. So, May corn's down a penny and 3/4, 462.5. We got new crop corn down a penny and a quarter at 449 3/4, below the 450 magic number. May beans are 3 cents weaker, 10.06 3/4. New crop beans 3.5 lower at 10.04.5. Both hanging on to that 10 handle here as we start the week. Soy oil is down 1/4 cent, 42.29. Soy meal's down 2.10 at 305.10. We got wheat market. That's the leader to the lower side. Chicago wheat down 11 cents, 547. May KC wheat down 12.5, 576 1/4. New crop July KC wheat down 11 3/4, 591 3/4. So lost that 6 handle on your KC wheat. Looking over at your livestock markets, we got feeder market up $1.15 on your March, $1.40 on the maize, 286.375 on the April feeder cattle contract. Looking out at August is 290.025, still below the highs last week, but gaining some ground here after the cattle on feed report last week. Live cattle are 90 points firmer, 60 points firmer in the April, 207.62, 203.625 on the June, and your lean hog's a little bit weaker. Down $1.80 in the hog market, and June down $2.80. So the hog market is looking a little dicey and ugly here out of the gate on the week. Energy markets, crude oil is up 30 points, 68.59. Diesel is relatively unchanged on both sides of the market. Nat gas is down a penny, 396.70 on your April nat gas contract. The stock market is firmer here, 500 points higher on the Dow, 42,806. The S&P up 84 points, 5,800, not 58,000. That'd be up pretty significant. The NASDAQ is 360 points higher at 20,320. The Russell's up. Bitcoin's 4,000 firmer, 88,000. Gold 6 points higher, 3,027. Silver's up. The dollar is a little firmer as well here. So, all right. Markets, wheat market, not what we want to see here on the wheat market to start the week, nor on any of the grains. Cattle opened up a little weaker and then have rallied since then. So it's good to see the cattle market bounce back. But we alluded to it last Friday, alluded to some changes. Everything in the world is always changing. That's about the only thing consistent that we can predict, is that things will change. So on Friday, CIH completed the purchase of Advanced Trading. So ATI is now a part of CIH, and it's an exciting combination of two businesses that complement each other very well. So this has been in the process for quite a while. It's been shareholder knowledge for a few months, but it's been in the works on the back end for a little bit longer than that. But we got great tools, great tech, two great companies coming together for risk management, education, execution. We've got more diversity in people, great minds, great resources. It's an exciting combination here. So CIH completes the purchase of Advanced Trading last Friday, and onward and forward we march here. So, but with that comes some change, and in the process, Connor B has decided to pursue other opportunities, and I'm gonna miss my friend here going forward, but can't possibly put into words how much fun we've had over the last 18 months doing this Live at 9 show together. And Connor's a founding member of ProMedia, and we put together, I think, over 300 episodes of this Live at 9 show, and a number of premium content specials. So it'll be different going forward, and love doing it with him. It's fun to have a friend here doing it, but with change sometimes comes opportunity, and I want to wish Connor the best of luck going forward. But the show's going to go on, and I know he'd want the same. So onward we go, and I'm excited about the opportunities ahead. So look forward to bringing more value to our brokerage customers, our insurance customers, and our premium subscribers as we tap into the rich tools, tech, and resources of CIH. We're going to help navigate these volatile ag markets. And I don't expect a shortage of volatility going forward. It's dynamic markets right now, and you need to be paying attention to what's going on here. And you need to, tap into resources that are helping you navigate that volatility. So embrace it, position for it, and go forward here. So with that, we're going to have a formal press announcement here, I think later today, that'll hit the wires, hit industry, and talk about the combination, the acquisition there. But we're excited about the change. Things will look a little different. We're figuring things out here, but I'm excited about what the future holds. Premium content, we're going to continue pumping that stuff out. Our news wires that come out each day, the text, actionable text for making decisions, and then the videos as well that dive into things you need to know and break those things down. And if you're not a premium subscriber today, it's a great time to join. So head on over to ATI ProMedia and sign up today. If you want to text us, you can. We'll give you a free 30-day trial of premium content. If you shoot me a text at 309-402-0039, tell me who you are, your location, that you signed up for ProMedia premium content, we'll give you 30 days free if you go sign up here this week. So that offer will be good here this week. But look forward to expanding that. Look forward to continuing to bring you great value going forward. But nonetheless, enough with the press announcement and the breaking news. Let's dive into some headlines here. Okay, I'm going to load up on my coffee, wet my whistler a little bit. All right, Wall Street Journal reports Trump admin to hold back some of the April 2nd tariffs. All right, this is the stock market firming up. Dow's up 500 points, but rumor is that the White House is narrowing its approach to tariffs set to take effect on April 2nd, likely omitting a set of industry-specific tariffs while applying reciprocal tariff levies on targeted set of nations that account for the bulk of foreign trade with the U.S. And some comments out there was that the planning remains very fluid. So April 2nd is a little over a week away. Next Wednesday's April 2nd. We got the prospective plannings and the grain stocks report on Monday, and then you've got the April 2nd tariff stuff on Wednesday. But everything's fluid with that, it seems like. And these tariff headlines, these trade headlines, they change by the minute, by the day. So don't get anchored too much to it. What they're going to look like going forward. But we got the stock market firmer on optimism that the tariffs will be less restrictive or more dialed in than previously thought. So one big headline here. Next big headline is we got Russia-Ukraine talks still out there on the table. Officials they're not meeting face to face, but U.S. is serving as a mediator once again, self-appointed mediator, I believe, for the Russia-Ukraine peace talks, trying to bring both sides to the table and agree to a ceasefire, a larger, longer-term, more permanent ceasefire. I got a quote for you that was very interesting. This is from National Security Advisor Mike Waltz in his Face the Nation that he said to Face the Nation on CBS over the weekend. But his quote is, "We are now going to talk about a Black Sea maritime ceasefire so that both sides can move grain, fuel, and start conducting trade again in the Black Sea." Interesting comments there. I think that highlights, very applicable to U.S. farmers as Black Sea exports, wheat, corn, etc., important to global grain trade. But keep that in mind. We'll see how things shake out here over the week. I'm not holding my breath for anything, I'm not holding my breath on it, but you never know when we're going to get a headline print that the war is over. And how does that impact exports going forward? Speaking of Black Sea situation, weather on the forefront. ICAR raised its forecast for Russia wheat production to 82.5 million metric tons from 81 million metric tons. So a little larger wheat crop coming out of Russia, according to ICAR, versus their past estimate. But that being said, 59% of Russian wheat is drier than normal over the past 90 days. So weather is really important there in the Black Sea region. Russia, the Big one, though, headline is 98% of Ukraine wheat is actually drier than normal over the past 90 days. So very intense weather situation going on over there. Maybe we get a ceasefire type of deal that opens up the door for some more exports. And we've talked about it before. Is that good or bad? Is Russia using wheat to fund the war? And do they have to stop fire selling their wheat to fund the war? Or, what different takes on that whole situation? Is it bullish? Is it bearish? But want peace out over in that region, definitely. So, all right, onward we go here. Brazil soybean export lineup on pace to be a March record. We continue to see record pace of soybean exports in Brazil as that crops comes out of the field. They're the number one market in town, number one game out there right now. So anybody in the market for beans is going to be going to Brazil for those as that crop comes out. Also got Brazil weather in focus going forward. 80% of the safrinha corn crop has been drier than normal over the past 2 weeks. 60% of that crop drier than normal over the past 30 days. In the next 10 to 14 days, we see a little more active weather pattern and near normal rainfall anticipated for much of that crop. We'll see if we get it. It's one thing to forecast some rain. It's another to receive it. I know that living out here in Western Kansas, God bless the weathermen. They try, but Mother Nature is almost as unpredictable as these markets, probably equally unpredictable. But yeah, we'll see how much rain falls in Brazil. That's going to be, you got the prospective plantings, you got the grain stocks, you got the tariff situation, and you got South America weather. Important time for that crop down there. In South America, that safrinha crop is 70%, is 3/4 of the corn crop, and a large chunk of it's grown in Mato Grosso. So keep an eye on weather out there. All right. Had COT report, commitment to traders. Also had that on Friday. Funds liquidated more of their corn long position. Got a graphic here. Going to flash up a couple graphics. Here's a snapshot of your corn COT position. 107,000 net long versus 337,000 net long on towards the end of February. They've continued to liquidate that long position, so they're set up to load the boat and add some more length to this thing if they want. If you want to take the bullish side of that, hey, we've had a sell off here, and they can reload on their longs if you want to. If we get a situation or a story that warrants it, or they could continue to sell and go net negative down to 300,000 short and liquidate another 400,000 of their position. So yeah, two ways you could spin that one depending on how you want to do it. But on a positive front, we got the feeder cattle net a record, I believe, going back since they've started collecting data since I think 2006, a record fund net long position in feeder cattle out there. So good to see that. We've got record prices, had record prices. They're off a little bit. We're going to see if we can retest those this week. But a record link there on your funds, feeder cattle funds. All right. Had a cattle on feed report on Friday. We did a premium special on that, pumped that out to you guys, breaking down the meats. The report was bullish. It was, how much of it was already factored into the market. Out of the gate, we didn't see a real shocker of a reaction on your prices. But we had a bullish placements number, significant decline in placements. It was largely expected, but it was maybe a little more bigger cut in placements than the trade was looking for. 17.8% lower. Flash this up for you real quick. On feed number, 97.8% of year ago, 82.2% placements versus that expected 85.6. Marketing's 91.1 versus 91.8 expected. Versus a year ago. So yeah, significant decline in placements, but last year's Fed placements was record large. So weather restrictions on Mexican feeder cattle imports due to that screwworm, import restriction, those impacting the placements. And, a lot of it's availability, but the other piece of it is also weather and then that import restriction. So we'll see how things bounce back with March placements. I know there's more active auction data happening right now, and maybe we'll see things even up here in March. But nonetheless, some bullish numbers at surface level, and the trade is kind of liking it here today with feeders up $1.50 on the board. Also got strong cash out there in your cattle market on the live cattle side of things. You had the live cattle trading in the south $7 higher, 210. North was up $10. So that strong cash bid on your fat cattle supporting things as well. We got green grass and grilling season right around the corner. Got to watch the cutout going forward. Cutout closed at $3.25 on Friday. It was down $2.61 versus the day prior, but it was $7 firmer than the previous week. So cutout is 325. That's a supportive level. How much more upside is there in the cutout, and how long will it hold on to that 325 level? So watch the cutout here going forward this week. Indicator of consumer demand and your retail pull on beef. Yeah. So in the cattle front, I got a quote for you. I think it's a Mark Twain quote. I'm not real sure who says it, but I believe it's Mark Twain. It's what we know for sure that just ain't so. That's what ultimately can wreck your party. So we know some things in the beef market. We know the supply story, but how bullish will it be? Don't confuse brains with the bull market here. It's great to ride that bull and embrace that bull as we're going up. LRP is a great product. If you guys are interested in it, we can offer it to you. LRP is a great foundational risk management tool to get you in control, protect values in your cattle market, unborns, whether you're running grass cattle this fall, whether you're feeding them out, look at LRP and then take it to the next level by combining options with that LRP position to embrace volatility and manage those positions going forward. We saw $50 to $60 trading range in feeder cattle last calendar year. We've seen a significant range already this calendar year. What are we going to see going forward? Be interesting as we roll here. So I'm going to jump into some comments here, and then we'll kind of look at the week ahead, and then we'll get the heck out of here. So second worst basis locally, Mr. North Dakota boy. I like that. It took me a while to get all that. There's only so many vowels in that name, so it took me a while to read that there. Mr. North Dakota boy. Second worst basis locally for corn in 21 years. 60 cent. Will this change at all? Good comment. I think your feeder cattle and feeding cattle, grain consuming animal units, rebuilding the poultry egg layer type of that sector. We need to see that tick up here and create that pull. We need to see a stronger export we got a strong export program there, but I don't know. Basis is very regional. That's a good question for our commercial brokers. You get up there. I know you guys have had a tough time with that basis market in spots there. I think that says a lot about where the end user's at for you guys in being covered up and farmers selling here this fall. Going to be interesting to see how the summer plays out. Remaining farmer bushels get sold going forward. Watch the grain stocks report and the regionality within that next week. There might be some clues as to where we sit going forward here for the rest of this marketing year. So, all right, Nathan, Russ Farms, few replacements. Are ranchers holding back replacements? Good question. Or is the supply even lower than what is currently thought? Was that a guitar in the corner? No guitar bits for you. That's the artwork there, but not quite ready for prime time yet on that front. But few replacements. Are ranchers holding back replacement? I think so. I've never had more questions. In the cattle business selling bulls, I get lots of questions about, hey, anybody that has replacement heifers? Do you have some replacement heifers available? Got a guy looking for some. Lots of questions on that front. I think guys are rebuilding here. I've been talking about that for a while. But also, I think the record Feb placements a year ago was a big piece of the print that we got on the report today. Weather, also a big piece of that. And then generally, pretty good, wheat pasture grazing situation out there also led to people holding on a little bit. So we'll see what the March number brings next month. I would anticipate a little bit of a bounce back there on the placements, but nonetheless, I think we're starting to hold some heifers back. So, all right, with that, I think I'm going to sign off out of here. We'll look at the week ahead, position squaring ahead of next week's reports. We got policy updates, trade updates, the Russia-Ukraine situation, and we got South America weather, big pieces of the puzzle going forward. Watch for those updates on the models for precip down there in South America. And get squared up if you're worried about next week's reports, if you're worried about April 2nd tariff stuff, button up your marketing, and we'll see where the rest of the week goes. I'll be back Wednesday. Got some personal stuff to do tomorrow. I think we're going to skip a show. First time, I think, since 18 months that we skipped a show. But, hey, it's going to happen. Things are changing. We'll keep delivering high quality content to you, and we'll catch you guys Wednesday. I'm going to click the button and get out of here. We'll see y'all. Have a great